Have you ever wondered how money moves around the world? It's a fascinating process that involves a complex web of transactions and exchanges happening every second of every day. It's like a giant interconnected network, and at the heart of it all are financial markets. These markets are the lifeblood of the global economy, connecting different parts of the world in a seamless flow of capital. These markets are where businesses and individuals go to raise money, invest their savings, and manage their financial risks. Whether it's a startup looking for funding or an individual planning for retirement, financial markets provide the necessary platform. Think of them as giant marketplaces, but instead of buying and selling goods, people trade financial assets. These assets can include stocks, bonds, currencies, and commodities, each playing a unique role in the financial ecosystem. Financial markets play a crucial role in our global economy. They determine the prices of assets, influence economic policies, and impact the financial well-being of individuals and nations alike. They facilitate the flow of capital, enabling businesses to grow, create jobs, and develop innovative products and services. This flow of capital is essential for economic development and prosperity. Without them, our world would look vastly different. The absence of financial markets would mean a lack of funding for businesses, fewer job opportunities, and stunted economic growth. Imagine a world without the ability to invest in companies, buy a home with a mortgage, or even save for retirement. The financial security and opportunities we often take for granted would be severely limited. In the following sections, we will demystify the world of financial markets, exploring the different types of markets, how they work, and why they matter to you. From stock markets to bond markets and everything in between, we'll break it all down. Let's start with one of the most well-known financial markets, the stock market. This bustling marketplace is where fortunes are made and lost, and where companies go to grow and thrive. When you buy a share of stock, you're essentially buying a small piece of ownership in a company. This means you have a stake in the company's future and can benefit from its success. These shares are traded on stock exchanges, such as the New York Stock Exchange or the Nasdaq. These platforms facilitate the buying and selling of stocks, making it easier for investors to participate in the market. Companies issue stocks to raise capital for various reasons, like expanding their operations, launching new products, or entering new markets. They might also use the funds for investing in research and development, or paying off debt. This influx of capital can be crucial for a company's growth and innovation. Investors buy stocks hoping that the value of their shares will increase over time, allowing them to sell them for a profit. This potential for growth is what attracts many people to the stock market. Of course, the stock market can be volatile, and the value of your investments can go down as well as up. Market fluctuations are a normal part of investing, and they can be influenced by a variety of factors. It's important to remember that investing in stocks always carries some level of risk. Therefore, it's crucial to do your research, understand the market, and consider your risk tolerance before making any investment decisions. Bonds represent a different way to invest your money. When you buy a bond, you are essentially lending money to a government or corporation. The borrower promises to pay you back the principal amount of the loan on a specific maturity date, along with periodic interest payments, known as coupon payments. Bonds are generally considered less risky than stocks, as they offer a fixed rate of return. However, they typically offer lower potential returns compared to stocks. Governments issue bonds to finance public projects, while corporations use bond offerings to raise capital for expansion or to manage their debt. Commodities are raw materials or primary agricultural products that are traded on exchanges around the world. These markets deal in essential goods like oil, gold, wheat, corn, and coffee. The prices of commodities are influenced by factors such as supply and demand, weather patterns, geopolitical events, and global economic conditions. For example, a drought in a major coffee-producing region could lead to a surge in coffee prices. Investors can participate in the commodities markets through various instruments, including futures contracts, options, and exchange-traded funds, ETFs. Section 5, Forex, Navigating Currencies. The foreign exchange market, also known as forex or FX, is the largest and most liquid financial market in the world. It's where currencies are traded 24 hours a day, 5 days a week. Businesses and individuals participate in the forex market for various reasons, including facilitating international trade and investment, hedging against currency risk, or speculating on currency movements. Exchange rates fluctuate constantly based on a complex interplay of economic factors, political events, and market sentiment. Understanding how to navigate the complexities of the forex market can be crucial for businesses operating in a globalized economy. Section 6. Supply and demand, the heartbeat of the market. This section delves into the core principles that govern the financial world. The forces of supply and demand are the driving forces behind price movements in all financial markets. These forces are like the invisible hands that guide the economy, influencing everything from stock prices to commodity values. When the demand for an asset is higher than the supply, the price tends to rise. This is often seen in booming markets where investors are eager to buy into the next big thing. Conversely, when the supply exceeds demand, the price generally falls. This can happen in markets where there is an oversupply of goods or a lack of consumer interest. Imagine a popular new tech gadget hits the market. The anticipation and excitement can drive demand through the roof. If everyone wants to buy it but there are limited supplies available, the price will likely skyrocket. This scarcity creates a sense of urgency among consumers. This is a classic example of demand outstripping supply. The higher the demand and the lower the supply, the more valuable the product becomes. On the other hand, if a company produces far more of a product than consumers are willing to buy, they might have to lower the price to sell their inventory. This is often seen in clearance sales where businesses try to offload excess stock. Understanding these fundamental principles of supply and demand is essential for making informed investment decisions. By grasping how these forces interact, investors can better predict market trends and make strategic choices that align with their financial goals. Section 7. Financial markets and you. Why should you care? While the world of financial markets might seem complex and distant, it impacts our daily lives in countless ways. From the interest rates we pay on our mortgages to the prices we pay for groceries, financial markets play a role in shaping our economic realities. Understanding how financial markets work can empower you to make better financial decisions. It can help you plan for retirement, save for your children's education, or achieve your financial goals. Whether you're a seasoned investor or just starting out, financial literacy is a valuable asset. Section 8. Knowledge is power. Your journey to financial literacy. The first step towards financial literacy is acknowledging that you don't need to be a financial expert to take control of your finances. There are numerous resources available to help you learn, from books and articles to online courses and financial advisors. Start by setting small, achievable goals, like creating a budget, building an emergency fund, or learning about different investment options. Remember, financial literacy is a journey, not a destination. The more you learn, the more confident you'll become in making informed financial decisions that align with your goals. Section 9. Conclusion. Embracing the world of finance. Financial markets might seem intimidating at first glance, but by breaking them down into digestible concepts, we can begin to understand their inner workings. From stocks and bonds to commodities and currencies, each market plays a unique role in the global economy. As you continue your journey of financial discovery, remember that knowledge is power. The more you learn about financial markets, the better equipped you'll be to navigate the complexities of our interconnected world. Embrace the world of finance and watch your financial confidence soar.